Hi there. A very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stock, and I'm live in this live session with you all. And hopefully, you all are doing well, and your investment journey is also doing pretty well. The markets have shown a lot of movement so far, and the markets have done extremely well over the last, you can say, 1 month or so. Uh, Hoping for the same kind of movement, albeit with a little bit of correction going forward. So, but that's how the markets are set up here. Plus, there is a lot of, you can say, hearsay about a lot of things like you have a situation where the inflation is rising, where there is a chance that interest rates may rise going forward, and a lot of things, lot of headwinds for the markets. So based on that, it seems like we could be having a tumultuous time going from 18,200 to you can say higher level from these levels of 18,200, 18,300. So in that respect, I believe that somebody who has bought or who has got positions in the market from say around 17,000, 16,500 levels should try to book profits here rather than look to hold on to its positions if you have a shorter term time frame. So that's probably the call on the markets. Apart from that, I feel that people should be having more cash on their books, because in the coming weeks after the budget you might get more opportunities to invest into other companies, other sectors. So I'll be answering your queries, but let's begin the session in earnest, and I'll discuss about a sector that is probably going to do well from March onwards. So let's discuss about that now, so that you as people can build positions into those stocks from say February onwards, end of February or so. The sector I'm going to discuss about is the you can say the farm sector or the agricultural sector. There are a lot of you can say companies in the agricultural sector, or you can say agrochemicals, which are set to do well during the monsoon season. So one needs to probably build positions right now and then take positions forward till July, August. Some of these companies I'm going to discuss about now. So one of the companies in that regard is PI Industries. Now, PI Industries has had a lot of trouble with respect to their, you can say, uh, with their respect of beginning of the last year or beginning of the financial year, and there they were having problems with some of their subsidiaries bringing about revenues, etc. Plus there was a deal that got called off, and so many things happened, due to which the stock did not go up for the last 6 to 9 months. It hasn't been performing. I think this season could be good for PI Industries, and somebody wants to buy into the stock, I think between 2,800 to 3,000, very good levels in this region to probably get into the stock and buy into this. This is one of the stock. The second in my list is Escorts. I think Escorts, the way it is behaving from 1800 to 1900, 1850, 1900, like that, once it takes out 2000, I see a 20-30% up move during this season. So in the next 6-8 months, I see a very good up move in Escorts. From current levels, one can accumulate the stock from 1850, 1860 levels, and can continue to hold for a target of 2250 at first, and then later on probably for greater targets. The third stock in this list, so this is Escorts and PI Industries that I have discussed. The third in the list is Sharda Cropchem. For some reason or the other, Sharda Cropchem has been doing extremely well, and probably there is some news around. And with the kind of business that it is up to, it is trading at only 11 12 times earnings. So, in my opinion, I think Sharda Cropchem is one stock that could be probably bought at current levels and on dips, and probably held on to for a 20-25% up move in the next 6 months. I think Sharda Cropchem is also something that could be looked upon as one of the better stocks to invest into. So these three stocks are my pick here. Apart from that, you can look at, in if you look at larger companies, then you can probably look at something like an M&M, Mahindra and Mahindra. Mahindra and Mahindra for me is it has been one of the best, you can say, consistent performing stock. And with its tractor segment and farm equipment segment probably taking off, I think it's going to perform decently. So a 15 to 17% up move from current levels in the next 6 months possible in Mahindra and Mahindra, 12 to 15%. So if somebody wants to play it safe, M&M is something to probably look at from a 6 months time frame. So these are the six stocks, or 4 5 stocks that I wanted to discuss with you. Uh, and there are smaller companies like Shakti Pumps, etc., which should prop up and do well, but Greaves Cotton and so on and so forth. But they have run up. So something like Greaves Cotton has run up a lot over the last 1 year. So probably it's better to stick with the 4 5 companies that I have just mentioned, and probably pick one or two of them and hold on to them for a 5 6 month trade for a 20-25% up move. All right, so I'm ready to answer your queries. Can you use the super chat and super sticker feature that helps me grow the channel and help you also ask me questions and eke out answers in greater detail? There is some problem at my end with the internet, so you might be getting the feed a little late. Kindly bear with that. So probably I'll be having a shorter session here, probably 10 12 minutes more, and would fix that. And on Sunday we'll have a decently long session. All right. Okay, so my view on Killpest is that probably Killpest is in a range between 440 on the lower end. I'm sorry, 440 on the lower end to 520 on the upper end. So probably one can look to accumulate or buy in this range. And whenever there is some sort of a corporate development that takes place with NSC listing, with the 3B Black Bio listing, etc., and then the big move will take place. Currently at around 450 or 470, 460, it is trading at around 15 17 times earnings, 1 year forward earnings, which is extremely attractive, which is not, you can say, expensive at all. So Killpest can be accumulated. Have at least a 3 to 4 year view, and then probably you will see the magic of the company. I think company is going to do extremely well over the next 3 4 years. A disclaimer I have the stock. India Mart is a buy above 7100 7200. See these stocks like India Mart, and somebody asked about D Mart as well. Both India Mart and D Mart are in a bear market now. The way it has fallen, the way the stocks have gone below. So India Mart is below 200 DMA. Uh, DMart is close to 200 DMA. I think better to avoid from a shorter term. From long term point of view, yes, you can accumulate, but have a 2 3 year time frame. Yes, you can accumulate these stocks at these levels. Clean Science Tech is a decent company in the pharma space. So again, it is expensive in my opinion. So what you need to do is wait for market decline, probably to 17,700, 17,800, and then probably look at these kind of stocks and buy into these kind of stocks. So that's the call on Clean Science, as you have asked. Similar with DMart, I think around 4200 current levels are good, but I don't see an immediate up move in the stock unless in 3 months time the movement picks up there after the results. So probably after the results, if results next results are decent enough, then you will see a movement in DMart. Otherwise, you'll see DMart sulking even further. 4,000 is a very important support. If that goes, then we are looking at lower levels on something like a DMart. Okay. Nathan, thanks for your contribution. Star Health, avoid if you're making money, book profits. If you're not making money, book out. There are better health insurance companies that are listed. Plus, you can look at other sectors as well. So, avoid this. There are many sectors to invest into. I would not suggest holding on to Star Health. Okay. See, chemical sector has had its run over the last 6 8 years. I think it has been 7 year of a clean run in most of the chemical sector. I would say they are and avoid the chemical stocks at these valuations, apart from few, and it's very hard to pick some. So I would say avoid the whole sector altogether. So that's the call there. So Sequent Scientific is moving very well, and I believe that Sequent could be headed much higher from current levels of 175, 180, which it was yesterday. It has moved up even higher. The way it has taken out 181, 182, it seems like it is headed towards 220 first, and then even eventually towards 260, 270 over the next 6 months. Yes, there could be some up and down movement, but the way volumes are picking up, there are informed investors, it looks like, that they are buying into the stock. So I believe Sequent is a buy at these levels and on dips. That's the call. Santosh, thanks for your contribution. Mastech and Tata Elxsi, will they go to previous high? A disclaimer, I have sold into both, and the point here is that I believe that before results, these moves take place, and these are opportunities to book profits on a shorter term basis since my portfolio was short term. So I've done that. Point here is probably we are entering into a phase next 6 months where the markets might be very jittery. So in that respect, I believe that if you're making money, book profits in here, and look at other sectors. Look at the farm equipment sector, look at the agricultural sector, look at the summer plays that you could be buying. So probably avoid is my call. Nathan, thanks for your contribution. My call on rate gain is that it is at a reasonable level, but the numbers have to kick in. So I would wait for the December numbers and then take a call on the stock. And again, I would not like to buy into companies which are newly listed. I would still look at companies which have been listed a year ago or 6 8 months ago rather than newly listed plays, because they have very little data available. So I would not like to buy into them at the moment. Okay. Hutamaki, in my opinion, is an avoid. See, these companies, I mean, in small caps, very few companies are pretty good or doing decently well. I won't say that you could get into Hutamaki at these levels or at any levels. Look at other companies in the consumer sector. TTK Prestige, better consumer stocks available, Astral, etc., Blue Star, and so on and so forth. Many other, you can say, consumer conglomerate, Polycap, VGuard, etc., available. So I would say avoid. TTK Prestige is an avoid. Uh, I think TCS can go there between 3 to 4. I don't think it will go to 4,500, but 4,300, 4,350 is what I'm looking at. Doesn't go to the buyback price that easily unless the buyback is big and a lot of things happen and the results, etc. So I won't say it's headed towards 4,500 that easily. See, Dixon, in my opinion, has had the run between September and Jan, and I've been telling that. So there are always phases. So if you're asking me short term, yes, Dixon might remain between 5,500 and 5,000 as a range. Long term, it is a very good pick. So I still believe it's a 1 lakh crore market cap company with a 5 year perspective. So somebody who's looking at that, yes, can accumulate at these valuations, something like a Dixon Tech. Okay. Bajaj Finance has run up. So the time to buy was around 6,600, 6,700. Now probably at 8,000, 8,200. Some people who have bought should book profits. Look for opportunities to buy around 7,200 or so. So that's the call on Bajaj Finance. I don't know which other stock you asked. So kindly write your question again. I've told about DMart. So you can Bharat reverse the tape and probably get your query. Then you can hear about DMart there. Okay. KPIT has shot up a lot. So now I won't say that you get into the stock. Probably the time was when it was consolidating. So avoid. See, Jubilant Foodworks should do well. Uh, One can accumulate here, but I think better levels to buy is around 3,800. So any 2-3% dip, 3 to 5% dip if it happens in the next few weeks, 2-3 weeks, that's where one should accumulate, and it's going to be a very good play during the summers because of the IPL, etc. So one can accumulate from here till end of February. Something like a Jubilant Foodworks. I see 6,000 coming in the stock in the next 6-8 months. Uh, See, Map My India, I have not tracked the stock right now as to what the price is, but any level below 1,000, closer to 900 or so, could be good levels to buy into. Thanks for your contribution there, Jagadish. Oracle Financials, very good stock from a long term point of view. Keep holding if you have it. If you don't have it, don't buy now. Let the IT index, you can say, decline a bit and then consolidate and then look to buy into it. If you have it, keep on holding. It's a very good dividend play, and it will consistently give you 17-18% CAGR. The good stock. Yes, PI Industries I've just talked about, Bharat. So 2,800 decent levels to buy, but have a 6-8 months view, and then you're going to make money in something like a PI Industries. Okay. All right. See, NBCC has had the run, so it was a call for most of the members, paid members on YouTube and Patreon at around 40, 41. And now probably book some profits, and if it get an opportunity at 45, 46, then buy. I don't see it going to 60. Yes, 52, 53 is perhaps where one should aggressively book profits. That's the call there. Okay. HCG, if you can give me the complete, you can say the stock name, I'll be able to answer that. Uh, okay. See, Infobin is a good business, but the valuations are stressed, so I won't be able see buying here. Yes, if you have it, then hold on to the stock. That's the call. But otherwise, I won't be buying into the stock. I've talked about NBCC. You can reverse the tape and talk about it, and sorry, hear about it. ONGC has had the run. If you have bought it at 140, 145 levels, those levels, book profits. I wouldn't suggest that you buy now. See, Healthcare Global is a very decent company, Ganesh. If you have it, then it's a good long term play. I won't say that it's a good short term play because most of the healthcare stocks might just correct going forward in the next 3 to 6 months. So, if you have a 2-3 year view, yes, hold on to the stock. If you have bought it for short term, then yes, book profits. That's the call. Prince Pipe should continue to do well in the next 2-3 months. I think all these pipe companies, etc., should continue to do well till April, May. So hold on to these stocks. I won't have you can say, an opinion on JSW Smith. In fact, most of the metal companies I'm not that aware of. So probably I'm not tracking that much. So I won't be able to comment on those. HDFC MC, if you have it from lower levels, then definitely hold on to the stock. Otherwise, don't buy at these levels. Wait for market decline to buy into these type of stocks. Yeah. Okay. All right, guys. Thank you. Thanks a lot for being online. There is some kind of an issue with the visuals on my end. I'll rectify this, and on Sunday we'll have a longer session. Thank you for being online. Thank you.